section 46, page 89.
46. We are live. We are live. This is Senate Finance and Senate Education, who is joining us via Zoom. We are going to continue our walkthrough of H 454. There's a adjustment. I'm not sure. I think, yes, we will do a 454 while John Gray finish his walkthrough of his sections, and then we'll go to Kirby, who will walk through the tax sections, and then Joey Fiscal will be going through the numbers with us, and then we will move on to other business. Okay?
Sounds good. John Gray, Office of Legislative Counsel. Good afternoon. I will screen share where we left off yesterday. And I'll try to be sensitive to time. I think I'll try to go into detail into the kind of core concepts, and then hopefully we can skip quickly to the performing changes and pieces like that. So where we left off yesterday, we had just closed out the amendments to Title 16, the chapter of the education title that relates to state funding of education. And so what we're jumping to now is the actual education property tax rate, both the statewide rate and the supplemental district spending rate. So we're now in Title 32. And Section 46 is amending the definitions section of your education property tax rate chapter. What you're going to see here is removal of those now outdated concepts: education spending, excess spending, your various spending adjustments, which are used to set a variable homestead rate for counter fluctuations in local spending under the existing system. Removal of the yields, which you won't need these anymore because, again, you don't have to account for that variation in local spending in your statewide rate. And then you're going to see the addition of new terms, and this is for your supplemental district spending, which is the locally voted amounts above your educational opportunity payment. I'm going to come back to recapture because it's not going to make sense until I've talked about the other concepts here. So I'm going to start with the actual core piece here, your supplemental district spending, and this is at the top of page 92. So this is the spending that the voters of a school district approve in excess of the district's educational opportunity payment for that fiscal year, provided that the voters, we'll come back to this carve out, but provided that the voters shall not approve spending in excess of 10% of the school district's EOP. So for most school districts, this means that you can vote above your EOP up to an amount equal to 10% of that EOP. I do want to call out the carve out here. Other than an interstate school district, under this proposal, the interstate school districts are carved out from this limitation. This is something that we're going to think about more in the next year, but you're going to see two carve outs proposed in this section. And just to explain the thinking there, if you're envisioning much larger school districts, and you're capping what they can vote locally to 10% of the EOP that you receive. Presumably for a quite large district, that 10% means they could have all kinds of expenditures fit into that 10%. Whereas for a really small school district, 10% of your district's EOP might not encompass very much. So functionally, a cap of 10% means something quite different for a very small district, which is why the interstate school districts are carved out. We're also going to have to think about, that these are federal constructs. So currently we have to treat interstate school districts are kind of plugged into the system, but we have to accommodate the fact that they are constructs of federal law. So you're going to see two instances of these folks being carved out, and it's something we'll think more about in the upcoming year.
Did the House, and maybe you're going to get to it, I'm sorry to steal your thunder, did they include or are they contemplating including the current excess spending threshold? So no, so it's just 10%, and if they spend 9%, it's the same as if they spend 3%.
Yeah, there's no penalty. You just have up to an amount that you can approve in excess of your EOP.
30% happened to be where it's the spending money.
So the EOP is just the 15,033.
The EOP accounts for weights. So the EOP is the base times your weighted long-term membership. So it is the aggregate figure that a district receives for all of its students, accounting for any educational needs that students have that are specific to them. So that is a
districts that have more weighted students also would have a larger amount.
They would have a larger 10% that they could spend. We'll come to a different piece related to the rate setting that doesn't use a weighted figure, but this 10%, because it's based on EOP, and EOP is based on weighted long-term membership, your cap would be affected by the weights that your district has. That's right.
Okay.
So some of those smaller districts, if they have a lot of students in poverty, could be able to raise some more.
I guess the thing I would just keep reminding you guys of is this is predicated on you're gonna have to revisit any of these questions once you've thought about what the boundaries are, because I think the backdrop to this was assumed to be something like a much larger district model in the future,
It's true.
in which case 10% means something quite different. And you might imagine too, to Senator Chinden's questions yesterday, the kind of fluctuations you might expect, like the volatility you might expect in a very small district, might not be as meaningful across a
If it
large
gets
district, right?
out by larger
Exactly.
districts.
Like the loss of 10 students with particular weights across a much larger district means something quite different than a
Then
Yeah.
2 kids, which is half your 4th grade.
Exactly.
Okay.
So supplemental district spending, the intuitive way to think about this is your voted amount, and you can vote up to 10% of your EOP. I will jump back to the yield. It will make more sense once I talk about subdivisions 21 and 22. So your per pupil supplemental district spending, this is intuitive. It's the per pupil amount that results from dividing a school district's supplemental district spending by its long-term membership. So this is what I was talking about. This is not weighted long-term membership. This divides your per pupil SDS, your supplemental district spending, by your long-term membership. And just to call out why what was chosen was long-term membership against weighted long-term membership. Some of the conceptual thinking here is that if the foundation formula is accounting for the cost of educating students, and you incorporate weighted long-term membership into the determination of your EOP, then the thinking is you have accounted for those educationally meaningful distinctions among students. And so any supplemental spending is just beyond that. That's on top, right? That you're just voting.
So
Amounts
I've
that
got
you want.
actual butts and seats that
Yep.
it's based on.
And so the per pupil amount is a per long-term membership, not per weighted long-term membership. So it's,
But that's contradictory to what we just discussed about the supplemental district spending, which does take into account the weight.
the sense in which it's different is one is setting what your cap is, like what amount you can vote. And this is just telling you what your per pupil figure is, which is going to matter for the yields we'll come to in a second. I don't know that they're contradictory. But you could ask, how should the cap be set? You know, should it be a percentage of EOP? Should it be 10 per, there's all kinds of questions to ask about setting the cap. And if you want a cap, I mean, that's even a good question too.
And we will ask that, sure.
Yep. I'm going to come back to the other definitions in just a second, but school district with the lowest taxing capacity. This is a concept that we use for equalization purposes, which is going to be relevant to the above definitions too. So school district with the lowest taxing capacity, intuitively, what you're trying to get at here is what is the lowest wealth district per pupil, basically. So this is the school district. And again, here's another carve out for those interstate school districts. So the school district, other than an interstate school district, anticipated to have the lowest aggregate equalized education property tax grand list of its members. So the lowest grand list for the district as a whole per long-term membership in the following fiscal year. So who can put forward the least in property wealth per student? That is what the school district with the lowest taxing capacity is. And the reason this matters is it's plugged into the formula for creating the local rates, and it allows for equalization. So
We have one lowest taxing capacity school district in the state.
that's what this would do, is pick out
Okay.
one district that would be your lowest taxing capacity district,
Okay.
and it would basically, and we'll see this in the yield that I'll come to in a second, basically it asks every district, regardless of their wealth, to apply the weight that the lowest taxing capacity district would have to apply to raise the amounts that they voted for. So everyone would apply the same rate to achieve the same dollars, because it would be applied across different tax bases. In a wealthier district, that would raise more funds, and that extra funds would be recaptured and sent to the reserve that we talked about yesterday. And I'm glad that you asked that, because that will make it much easier to then describe subdivision 20, the supplemental district spending yield. So this is the concept that's used to calculate the rate. And when we come to the actual imposition of the rate, it will be clear. But again, this is just how much revenue per long-term membership could you raise in that school district with the lowest taxing capacity using a 1% rate, using a $1 per $100 of equalized education property value. So you ask at a $1 rate in the lowest taxing capacity district, how much revenue could you produce? And then you're going to take whatever amount you voted in your school district, you're going to divide that amount as a per pupil figure by this yield, and it will give you a rate that determines basically if you pretended to be that lowest taxing capacity district, what rate would you have to use to raise the amounts that you voted? Like that's the concept. Pretend that you're the lowest taxing capacity district. What rate would you have to apply to raise the funds that you voted? And the end result of this is that for any district that is wealthier than that lowest taxing capacity district, there will be recapture. Recapture is the amount of revenue raised through imposition of the supplemental district spending tax that is in excess of the school district's supplemental district spending. So this does mean that for the school district with the lowest taxing capacity, they would not have any recapture, right? They are taxing at the rate that is required exactly to raise the amounts that they voted. But everyone else, they would use the rate that that district would have to use, and inevitably would produce extra funds, and that would.
And that money would be redistributed to the lower.
The way that it works is it goes to that reserve, and the reserve is available to address miscalculations, and then it would waterfall into the school construction special fund, which would be available statewide. That wouldn't be exclusive to anyone.
Okay, let's get back to that.
So the lowest taxing capacity district, is it the lowest of all the districts or lowest of the districts that are deciding to spend above?
It is the lowest of all districts.
Okay, so there's not sort of gaming of when.
Who's coming in this year? Yeah, it's not about who's entering the pool, basically.
Okay.
Yep.
Okay, but that money doesn't get redistributed to the lower. It
That's
makes it as difficult for the higher wealth districts to raise money as it is for the lower wealth districts. And then the money raised goes into a school construction fund.
Yeah, I think that's fair. The way that I think about it is every district, regardless of property wealth, would be burdened at the same tax rates to raise the same funds.
See, before we've tried to make it easier, this time we tried to make it easier for low wealth towns to raise money. This is just making it more difficult or painful for high wealth towns, but we'll have to work.
I see what you're saying. Yeah, and you'll recall from Representative Kornheiser's testimony yesterday that there was an open question whether folks even wanted local spending restrictions. So
yeah.
Okay, thank you. I know you can't comment on policy decisions, but and this is sort of like I'm musing out loud, but it seems as though, given this construction, that it's going to be really important when we're thinking about creating the district that we try to level the wealth of the districts as much as we possibly.
So this is I don't want to cut you off also.
No, that's
that makes a lot of sense to me, and you will recall, and I hope I hit this note yesterday, that in the school district boundaries subcommittee, the tasking of setting those boundaries, there are a set of considerations that are meant to flow into that. And one of them is the distribution of equalized grand list per pupil. And that's meant to get at, can you minimize basically variance across the school districts? If you had perfect equality across, there would be no recapture. It would be the same for everyone to raise. If you have slight differences, maybe someone raises a little bit extra, but basically they're not having to tax wildly differently from what they otherwise would have to. But it also points to how this is predicated on what the vision of the school districts is. Because if you have something wildly different from that, if you have great variation in wealth across districts per pupil, and it is a per pupil figure, not just wealth, that could produce folks taxing at rates where they raise significantly more than they need to. So the variation in available grand lists property value per pupil matters.
Okay, and we did have Julia go through a whole series where we looked at different maps and the property wealth per student, per district. And so we have gone through that and we will go through it again to refresh ourselves. So, and we used, I think, 2 sets of method. We used the governors or maybe the school districts and then
You got the
Senate
VSBA,
Ed.
which is up there.
I think we
Yeah.
have done the VSBA.
I think the VSEA and Senate, yeah, I think we did the VSEA. And looked at a couple of those.
It's probably a question for Julie Richter when she comes in, but the other approach that we floated in various discussions was to actually combine a recapture and a state guarantee, where you effectively would have the school districts in the middle and you can actually just have it be a prorated rate. Versus districts that were below would get a state guarantee, making their dollars cheaper, and states above on a prorated relative to the ratio, they would get the recapture amount and then try to balance it in the middle. Was that at all considered by the House?
I have not worked on anything like that. The closest concept that I looked to was the state guarantee based on the administration proposal, but that's different than what you're describing because it didn't penalize any folks above the median and they could raise it lower tax rates. I think what you're describing is everyone's received the same funds, the same rate. It's just that those below would be receiving what is recaptured from what is above the median.
Yeah.
I think that's what you're describing. The thing I would call out about that is it then is contingent on folks entering the pool, right? If your wealthier districts didn't enter, it might not be available for the recapture. But I mean, I'm not saying that.
Yeah.
I just mean to say that's a practical difficulty that have to be confronted, and you might have to create some kind of additional reserve basically to account for yearly fluctuations and who enters the. I don't want to call
The
it,
minute
but-
you start raising over the foundation base, you start to need to accommodate greater that.
Well, it's closing remark on this. This is, I remember seeing the Education Commission of the states report. This is not a new concept. So other states do recaptures and a similar type state guarantee. So it might be useful if we are going to explore this in order to revisit that memo.
I'm gonna keep us, we'll get lots of committee discussion. I'm just trying to get us through this. So we can hear it all. And then we can remember what we've heard before. And then we can talk about it. We are going to have at least, this bill will reside for 2 weeks in ed, if we're lucky. It will reside for 2 weeks in ear, if we're lucky. And then it will go elsewhere. So we have a month pretty much to finish our work on this, and then we will go to conference, hopefully for a week. But I think first we need to just understand what the House did, and then we can start to pick it apart.
Sure.
Okay,
And I'm hopeful that we can be doing you guys' side of the puzzle throughout the weeks in which it's residing in ed. So we've talked about those sets of definitions. I'm happy to remind you of them as we walk through the actual tax itself. But now we're outside of the definitions. We're on page 93. Section 47 is the actual imposition of the 2 taxes. And I just want to call it, it's 2 taxes. There's a statewide tax. And that's the thing that you can know from the number 1 letter. And that's what raises the EOP for each school district. So it's raising the foundation amount.
and we would set that.
So that is just based on the figure that's plugged in. Currently, that's that roughly $15,000 figure, and whatever weights you happen to have, that's determinative of your EOP for a school district, plus any inflationary adjustment. So that's why that December 1 letter can set out what the actual statewide rate is. It's based on figures that exist. The information that you need yearly to update is whatever the inflationary adjustment is, and then any changes in weights and your weighted long-term membership for school districts and their whatever their grant list, if there's grant list verification. So that's why the December 1 letter can set out the rate rather than yields that would in future produce.
And this does away with all the CLA and.
It does not get rid of the CLA. We do get rid of the statewide adjustment because you don't have, you're not having to account for a yield for the statewide rate.
Okay,
So you still need to account for the fact that properties can be assessed at different times and might not match fair market value.
yeah, then you have it reappraised. And
Yep.
there is in here.
Yes.
Reappraisals.
Yes, it may be dangerous for me to opine on this, because
Yes.
these aren't my section, but I would just say that there's theoretically a world in which you don't need a CLA if your valuations are regular,
Right.
right? But that would be it. So this is the actual imposition of the taxes. First, subsection A, you have your statewide education tax that's imposed on all non-homestead and homestead property. Come to the classifications. I'm not going to delve into them, but we'll speak to those pieces. And the new classifications are non-homestead classifications. But as you can see, we're removing the uniform non-homestead property rate. And we're removing the tax rate and adjustments and the yield for the homestead property tax rate. So a statewide education tax is imposed at a rate sufficient to cover ed fund expenditures other than your supplemental district spending, right? That piece is being raised exclusively locally. So at a rate sufficient to cover expenditures from the ed fund after accounting for forecasted available revenues. This is a concept similar to how it currently works, where basically you account for all other non-property tax revenues that go into the ed fund. And based on the hole that's left, based on the education spending that hasn't been covered by those non-property tax revenues, you then determine what your tax is going to need to be to cover this. So you may have things beyond the EOP, right? Like grants or the like that are coming from the ed fund. So you just need to make sure that those are picked up in whatever rate that you set.
And in this bill, all four classifications are taxed same.
Yeah, I'll come to that in just a second. So, as you can see, intention of the General Assembly that the statewide education tax rate would be adopted for each fiscal year by act of the General Assembly. But you would have that pretty good information from the December 1 letter. And the statewide education tax rate would be adjusted for homestead property in each class of non-homestead property. So you're getting one rate in that December 1 letter, but there would be factors that you would multiply that rate by to determine your various homestead and non-homestead rates. So that's what,
I mean,
or not.
that's we could tax them all the same.
And that's currently what you see, exactly.
Yeah.
So the table below is a chart that sets out the different classes and gives you the factors by which you would multiply that statewide education tax rate. So you see the same factor for each of these, and you see the different classifications. I won't, like I said, I won't dive into the classifications themselves, but just to set out what's going on with the factors. These haven't been determined yet what the relative ratios would be. The thinking, but who's to say what will happen? The thinking is that there would be some fixed relationship among the non-homestead rates. So it could be like 2, 4, 6. I'm not saying that those are the numbers, but a fixed relationship among those that would be set in statute. And then if in a given year you wanted non-homestead versus homestead to bear different proportions of that statewide education tax rate, you would just notwithstand your homestead factor, basically. And that would just, but you could leave these three fixed factors to say, if you wanted to incentivize apartments versus, whatever it might be, you could maneuver the levers here to incentivize particular conduct or to generate additional revenues. So but right now it's all at one, and part of the advantage it has of just for getting a bill through this year, aside from not knowing what the factors would be, it means no one has to conduct fiscal analysis to determine what the decisions would be.
And depending on which town you're in, right now, homestead and non-homestead. In some towns, the non-homesteads are paying less. So depending on which town, some of them may be getting a tax increase, so we're just doing the same. Depending on what the tax comes out, what we set.
But yeah, the factors that we don't know yet, will tell the message of what burden this means for folks. Or relative is the way you're describing it, what the relative burden of that statewide tax is. A lot of what you're going to see next is just conforming technical changes, so I'm going to go relatively quickly. You can see the existing mechanism for calculating that statewide education tax. You'll note the removal of the statewide adjustment, which we just talked about, because there's no longer a yield, which is where the statewide adjustment plugged in. The legislative body of each community would bill each property taxpayer at the applicable rate because they might have different rates based on the classification. Again, pulling up the statewide education, the statewide adjustment. I'm gonna go pretty quickly. On page 95,
Catholic, so that's good.
on page 95, you're gonna see the struct language for subdivision 3. I talked yesterday about pulling out, any kind of incentivizing, pieces related to passing budgets, because you're just in a different world now where passage of that budget means something quite different. So here was an old provision under the existing system. They called out if the district hadn't voted a budget by June 30th, they would have to have a fallback rate, basically. In this case, you don't need a fallback rate. Your statewide education tax is just your EOP.
And they're gonna get their base state funding. And if they're fighting over budget vote.
Exactly.
Will be the
Local.
supplementary local funding, and
Exactly.
we can find that out under.
May not do that. Yeah.
I hear many of my conservative friends get frustrated that school districts can afford a budget, fails, then they get to afford another budget, fails. They keep going. The budget, I mean, we could contemplate a world where you get one bite at the apple, put forward excess amounts, and if it fails, you fall back and you have to live within what the state deemed as your means.
I think it's 4 now.
I'm not saying I support that, I'm just pondering how that might.
There's all kinds of things you could do.
Well, I think we should have a conversation about whether we have access to that thing at all and what it's for. Right now, there are no parameters. They could do it for anything. And maybe we want to put parameters, say, these are the only things you could raise effective money for. I'm a little uncomfortable with access, so I think we need to rein it in.
We'll take a look. We've got cap, we can change the cap and say no. A lot of them depend on how much money we raise underneath. Is it enough to supply music and transportation and other things that other schools might raise extra money to cover? We don't. It'll depend on special ed and if that money is adequate and how much support can you give to the schools with their behavioral and mental health problems. There's a lot of moving pieces. And as soon as we tie one down, another one will start to move, but that's education funding.
I mean, having a good sense of what is covered by anything that's not supplemental district spending is going to determine presumably what your views of the supplemental district spending are. Like if all, conceivable baseline differences you need to account for are captured in outside of the supplemental district spending, it's just a different equation. But if there are all kinds of necessary expenses that have to be picked up locally, that would be a different, So diving into what the base is, and then there are pieces we don't know yet, right? Like those reports that are coming back on how special education, long-term plans, CTE, pre-K, all of those pieces are going to help inform this. So this is a multi-year question, is what I'm saying to you. Obviously, doing something this year, but you just may have to revisit and on page 96, I did want to call it, this is a substantive change. I think one that will be intuitive to people. But currently, the Secretary of Education determines municipalities' net education tax payments. And this is an update to move that to the Commissioner of Taxes. So hopefully it makes sense to folks. This was something that I think the folks in Ways and Means were surprised wasn't already the case. And this language is struck because you'll see later the property tax credit is repealed. Some technical provisions at the bottom of the page are struck because you don't have to have weighted rates based on membership in multiple school districts under this new concept. So I'm going to jump to page 98, and this is your second tax. So first, it's your statewide tax for raising that base amount plus expenditures from the ed fund.
Okay, so we set the base amount, the towns set their excess spending. Then the tax commissioner adds A and B and says, this is your tax rate.
It's a little different than add. They'll just display both rates, but that's the idea. So a supplemental district spending tax is imposed. And this is not, the classifications don't matter for these purposes. This is a uniform rate across all classifications of properties. That supplemental district spending tax imposed on all homestead and non-homestead property that approves spending pursuant to a budget presented to the voters. We talked about that ballot language yesterday. And here's where the yield comes in. So the Commissioner of Taxes determines the tax rate for each school district by dividing the school district's per pupil supplemental district spending as certified by the Secretary of Education by the supplemental district spending yield. So what this tells you conceptually is, again, pretend that you are the school district with the lowest taxing capacity. What rate would you have to use to raise the funds that you voted? That's what this calculation tells you, because it gives you a number that is a proportion of the revenue that would be raised at 1% in the lowest tax.
Okay, so 1% of my tax rate on the lowest spending school will raise $500 or $100 a student. So
Exactly.
every school that votes $100 a student will pay additional.
They would divide that 100 by the 500 that could be raised at 1% in the
Okay.
lowest taxing capacity. That would give you 0.2, and you'd have a 20 cent. Yeah.
Okay.
And I'll just say, because I know that some people are visual, I don't have anything visual for you. But Julia does have slides on examples.
Okay.
Not to force her to do that.
Okay, so we will leave it to Julia to help some of us who are visual and.
Yeah, but the way that I think of it is easiest to understand just without something in front of you is, if you were the lowest taxing capacity district, what rate would you have to apply to raise what you voted? And that's what you will apply in your district.
Okay.
Not the lowest spending district.
Not the lowest spending, but the lowest
Lowest
taxing
profit.
capacity, who has the least grand list value available per pupil. And again, that's a long-term membership, not a membership pupil.
Okay.
The technical provisions here, so billing and the like, are the same mechanisms we just walked through. So this just mirrors the technical provisions for how the statewide tax rate is collected and assessed. So I don't think we necessarily need to spend time on these pieces. But if folks have questions, please do reach out. Same schedules. Again, we pick up I talked before about the substantive change from Secretary of Education to Commissioner of Taxes. We determined that net education payment, same piece here. So Commissioner of Taxes would have that obligation. Section 48 is your December 1 letter. This is going to look quite different than what is in current law. And it's going to consist of two things: recommendations. And I'm going to come back to this. I'm actually going to go to the informational piece first. So we'll come back to subsection A. But the second part of the December 1 letter is just a set of information that's made available. And these are the pieces of information from which you could determine your statewide rate and the supplemental district spending yield, which you can then use to calculate your local rates. So the information you would be provided is the base amount for each school district, the LTM, the weighted long-term membership, and the aggregate property tax grand list, equalized education property tax grand list, the estimated education property tax grand list per long-term membership. So you could deduce that from the information in sub 2, but it would also be explicitly set out. And the reason this matters is this is what allows you to rank taxing capacity across districts. The way that we can say that someone is the lowest taxing capacity district is they are the school district who has the lowest aggregate equalized education property tax grand list per long-term membership. And so in 4, the letter would also identify that estimated school district with the lowest taxing capacity. And it would also set out the range of supplemental district spending in the previous year, just so you have a sense of what folks have done. From these figures, you can basically determine your rates and yields that are the recommendations above. So what does the December 1 letter recommend? Commissioner of Taxes, after consulting with Secretary of Education, Administration, and JFO, calculates and recommends the statewide education property tax rate we just talked about, and that supplemental district spending yield. And that yield is just what could be raised at a $1 per $100 equalized education property tax value in the lowest taxing capacity district. So that's something that can be set outright in this December 1 letter. The extent to which it might not be 100% certified for the following year is if they're updated counts, like if you don't have a completely accurate count of weighted long-term membership, or if there's some fluctuation in your grant list values. But basically, you're getting a clearer picture in the December 1 letter for like this is increasing predictability is the way I've described this. And what you pull out, we no longer need that homestead-based tax rate. Sorry, these are the assumptions that the December 1 letter currently makes. And it sets the yields and the non-homestead property tax rate. You would no longer need those because those are existing education funding system concepts. So that is your December 1 letter. And I will call out this for each fiscal year. We do have a fallback that the supplemental district spending yield would be the same as the prior fiscal year unless set otherwise. I don't know how, but I don't know how likely you are to need a fallback because kind of an empirical question what the yield is. But in the event that you didn't set one, you would have something available which would be yield. The next sections, I think I can flip through pretty quickly. These are just conforming revisions for that statewide property tax rate. But when we jump to page 103, we're talking about repealing the PTC, the statewide property tax credit, and replacing it with a homestead exemption. I think you guys have received at least one, if not multiple, presentations on this concept of the proposed homestead exemption. So hopefully I can do this relatively quickly too and jump to Kirby's section. So this first piece, we set out statutory purposes whenever we have particular credits or exemptions from the property tax. And so this is just your statutory purposes section, and it's spelling out that the statutory purpose of the new homestead property tax exemption is to reduce the property tax liability for households with low and moderate household income. And then the actual Chapter 154 amendments are in section 52. So this is your repeal of the PTC. You maintain the municipal property tax credit and municipal circuit breaker, and you replace the statewide provisions with a new homestead property tax exemption. So definitional changes, this is going to be fairly flow through from what the other changes. So I don't know that we need to spend a lot of time. We're going to see this is changed to municipal because we're removing the statewide. So now it's exclusively a municipal property tax credit.
That's the ordinance having.
We'll come to the municipal circuit. Exactly. We can jump down to, this is the definition for the new exemption. So it's a reduction in the amount of house site value. Just to call out, house site is your, your residence, is your homestead, but it's just surrounding 2 acres. Up to the surrounding 2 acres, so your house site value. If you had a much larger homestead, this exemption is not available against the full value of the homestead. It's only available against the house site value, which is that smaller circle, basically. So homestead property tax exemption, reduction in the amount of house site value subject to the statewide education tax and the supplemental district spending tax. So this would be available against both proposed taxes in the claim years authorized under these sections. Some cleanup changes in the next couple sections, removing gendered language. This is substantive on page 106, subsection B. This is trying to address the problem of folks purchasing a house and in that year not having available the homestead exemption. And so what this says is that in the case of sale or transfer to residents after April 1 of the claim year, any municipal property tax credit related to the residents shall be allocated to the transferor at closing. That's current law, just has some cleanup technical changes. But subdivisions 2 and 3 are new. So any homestead property tax exemption based on the transferors, so the person selling the home, household income would cease to be in effect upon transfer. So that would disappear at the point that they transfer the home, and the transferee, the person receiving, who is eligible to declare the residence as a homestead, but for the requirement to own the residence on April 1, because they purchased this post April 1, shall be eligible to apply for a homestead property tax exemption in the claim year when the transfer occurs by filing with the Commissioner of Taxes a homestead declaration and a claim for exemption on or before the due date, which I think is just a few weeks maybe out from that, but depending on when the due date is set, provides some additional flexibility so that if you're a little bit later in the year, the possibility is there for the person now claiming the homestead to potentially avail themselves of the homestead exemption. So they aren't deprived accidentally in that first year of the value of the exemption. So trying to sync up a little bit the person who owns the home upon transfer.
But now they have to pay the seller the prorated difference. So if I buy the house 6 months into the tax year, I have to pay the seller. I get the lower tax rate for the rest of the year, whether or not I qualify. But I have to pay the seller the difference, even if the seller is moving to Florida, which has created some people. Because the theory was, well, your income qualifies you, and if you're buying another house in Vermont, then you should have this extra money to go with you, but it frequently doesn't work that way. A lot of sellers are retirees and they are going elsewhere. So.
Yep. So
this might be a-
this is different. Yeah.
Yeah.
And just to call out where that kind of process can come from, this sub one, which allocates that existing PTC to the seller, unless the parties otherwise agree. So folks can negotiate essentially what happens with the credit. Forms, tables, notices, more conforming changes here just to pick up the new homestead exemption and clarify that the PTC is now exclusively municipal, that 47. Figured you referencing 66, we are on page 108. This is your actual new exemption. This is the repeal of the PTC and the creation of the new homestead property tax exemption. So you're going to see a bunch of struck language. These are what we commonly talk about when we talk about the income sensitivity measures. And they're being replaced with new income sensitivity measures that are not a PTC, but are a homestead exemption. So that's what you see starting on page 110. An eligible claimant who owned the homestead on April 1 of the claim year shall be entitled to a homestead property tax exemption in the claim year in an amount determined as follows. And basically this provides decreasing exemptions as your income moves up. And it's a much greater number of income brackets provided for your income sensitive measures. The way to think about this is it smooths out the curve, right? The exemption gaps are much smaller between the income brackets, so you don't have the same effect of the cliffs under the existing system. I can walk through these particular figures. You're likely to see them in PowerPoints as well, but you can see that at the low end for a claimant whose household income is equal to or less than 25K, the exemption would be 95% of the claimant's house site value. And just note that in this concept, there is no cap on the value of the exemption run. If you have extremely low income and a multi-million-dollar house, for this, you would receive an exemption of 95% of the claimant's house site value. And that exemption would be capped.
Can I ask a question? Under paragraph C,
Mhm.
there's the 47 to
Yes.
50, and I'm assuming that's because that's where the circuit breaker
Exactly.
is.
Exactly.
That's a very small little,
This also came up in Ways and Means. Everyone wonders why this funny number that produces a $3,000 income bracket. I think everyone's in agreement that it is funny, like it is odd. It does stem exactly historically from that. It was just tied to the existing circuit breaker. And I think in the kind of final days, folks didn't have a ready number to switch this to retain a smooth curve, because you would require some remodeling just to ensure that that curve is tight. But this is something that folks have remarked on, just the oddity of a $3,000 bracket. And I think when you see the slides, my question when I first saw this was, well, is there still relatively equal portions of people within that bracket? Like there could be a rational reason to have a smaller bracket than others, right? Like this bottom one here is 22K, whereas this one's 10K. So we see some variation. Theoretically, it seems like you could have a distribution where a 3K bracket makes sense. That's not why it's here. It is exactly what you described. It comes
Yeah.
from just the old 47K figure.
and that's what makes it, I mean, I'll have to see the numbers on it, but it
Yep.
seems like we should be able to fix that.
This could be changed. Yeah, folks can change this, but it just means that you need to, there is some math work that would have to be done to make that happen.
We can do math in here.
We can,
We can do math.
no, and I'm wondering if somebody tax department, realtors, somebody knows. I know they know. I know if I get on Zillow, I can find out what the average home value is in any county, probably in any town in this state.
Oh, you want to know the geographic distribution of where the exemptions would be available?
Well, my concern again is people that are that are living on their 401ks and Social Security, which are now not worth what they were last year, but maybe worth more or nothing in 6 months, which is a significant portion of the Vermont population who have houses that are fairly valuable. But no option to downsize because don't have much valuable housing out there. So I just want to check. I'm not. I mean, how high does this go in income?
115,000. So that's what I was going to jump down to next. At the other end, you have to be less than 115,000, and folks in this 110,000 to 115,000 bracket would receive a 10% exemption against the Clinton's house site value. Beyond 115 or at 115,000, no amount of house site value would be exempted from either the statewide property, the SB property tax, or that supplemental district spending tax.
Okay, so if I make 110,000, which is, we were told the other day to be comfortably middle class was 120 to 150,000. So I am middle class, but not comfortably. And I have a house that is worth 500,000, which modest homes in some of my ski towns are worth. I can only deduct $50,000 of value.
You're getting a 20% if you're at 110,000. If you make 1 cent more, you're dropping down to a 10%. But these are tighter, the gaps and exemptions are 10% rather than the large gaps in the existing PCC. So it is smoother, but yes, there are threshold amounts at which a penny makes a difference. That's always the thing.
Okay, if I have a $450,000 house,
90K if you're at 110,000.
I'm making 110,000 this year.
You get an exemption, and assuming we're talking house size.
45,000.
Well, at 110, you get 20%.
And 110, I get 20%. So I get 90,
Exactly.
but I'm still paying on 300 and
You pay
stuff,
against 360. Exactly.
which is pretty steep for somebody that's 70 years old, has a good chance of living 20 years and is relying on their savings.
There's all kinds of things you can do.
But
But it's better than under front law, I think. 'Cause
I
that's-
think we'll look at it
Yeah.
and see what it is. Well, I'd like to see that laid out. I have had the experience of doing something where we hit people's retirement savings and hearing from every retired person in the state of Vermont that just should not play that. So I want to look at those numbers to find out how many people were hitting and where.
And I think you'll be able to get that.
Yeah, they have charts.
Yeah,
I'm going to go pretty quickly through the next pieces just from.
yeah, we're gonna get to curve.
Yeah, exactly. So conforming changes, I was speaking before about the retention of the municipal piece. So you repealed the statewide property tax credit, but you still have the municipal pieces. So that's what you're seeing here in your 47K figure. And you can receive a credit under this piece of information. Subdivision 4 was the old, or is the current statewide circuit breaker. That's no longer present. That was tied to the PTC. Now you just have the homestead exemption. clarifying that you can't reduce the house site value below 0 with any of the exemptions. And as I noted yesterday, any pieces where we're talking about dollar amounts, potential dollar amounts in sections, we've tried to include an inflationary measure. Because as you know, the current PTC figures, the income brackets, the income sensitivity measures are old figures. So if you included inflationary measures at the point that you set those figures, hopefully you can address some of the long-term effects of having those.
It would be
Stuck
a
in
lot
statute.
easier
Exactly.
than having us fight it out.
Yeah, but it will matter what that inflationary measure is. And so I would again remind you that the JFO is tasked under this bill with reporting back on inflationary measures by December 15th of this year. I will skip pretty quickly through these pieces because they're just flow through changes from what we talked about above. You can see that we have to account for allocating, like if you're a co-op member and you pay property taxes through your co-op, we want to allocate the value of that exemption. So that's technical measures to do that. Similar provisions on page
For
160.
senior housing, the property taxes paid through your monthly fee. A fee covers everything, like with Robin. Only not.
I'll go back there. Don't go there.
So the
But that's the way they're set up. You pay a monthly fee and it covers your expenses, and having sold them, it specifically say it's your property taxes, it's snow plowing and you name it, building maintenance.
So the way to think about these technical provisions, basically they're trying to treat the same way that we do for the existing statewide PTC, the homestead exemption. So for the co-op members or for those whose land is surrounded by a trust, providing the same provisions to ensure that they receive the value of that exemption. 66A is just setting out the technical terms for the commissioner to determine these exemptions and including verifying term to make clear that the PTC is no longer that statewide plus municipal, it's just the municipal property tax credit. So these are conforming changes. We are almost through my sections. So let's jump to, I think we can get out of this chapter on page 121. You're seeing conforming changes, but I do just want to call out this last line, subdivision C. We have this cumulative credit line, which is the cap at 5600 that you hear folks talk about. Because you've repealed the statewide property tax credit, that now just drops down to this $2,400 figure for your municipal property tax credit. So you can think of it as a conforming change, but I just want to call out, sometimes people say this $5,600 figure that would be removed because you're now down to just one of the tax credit is just the municipal.
That's the renter credit.
And we can jump. This folks will be interested in. On page 122, under existing law, we have provisions that reduce a late property tax credit by $150, right? This tries to treat similarly the exemption, so same delay, but note that because it's not a credit, you're not reducing the amount of the credit, you're actually forcing a claimant to pay a penalty of $150. So I just want to note out, it's applying conceptually the same thought, but it's not a reduction in credit, it's the actual imposition of the penalty. So I want to make that very close.
We'll.
Yes.
Yeah.
This is for delayed.
More time on that one.
Exactly, this is for those delayed declarations.
We have done away with a couple of them that were less in tax department in the last few years. Okay.
Yep.
This is the one where there's a late fee and every year somebody had a terrible sob story and we changed it. And it's the little things that so be very clear what we're doing. Set fees, late fees.
Yeah, and the reason I point to this is just, people may feel differently about a reduction in the credit as against having to actually pay their figure, although the net effect is the same. Cleaning up gendered language, I think we can jump to This is all cleanup. Yes, section 53. Okay. So this is just tasking the Department of Taxes by the end of this year, so December 15th of this year, with providing suggestions for updating the homestead declaration for any informational needs that this new homestead exemption would require. So just make sure that the form captures the new proposal. You'd have plenty of time to look at this, because that exemption isn't coming into effect as proposed until all the big provisions are coming to effect till 2029. So this is some years away, but you would have this year an updated form to think about. It wouldn't be coming into a law. These are just suggestions for how to update the homestead declaration. Conforming revisions in sections 54 and 55. 6, and then lastly, these are my last sections. Future review of foundation formula. You'll note that we talked yesterday about the rollout is of a cost factor foundation formula. These sections are about the potential move, if certain contingencies are met, to an evidence-based foundation formula. And so this amends in section 57, the Education Fund Advisory Committee to assist with the transformation of Vermont's education finance system and to provide recommendations on national best practices for addressing intra-school district effects of a foundation formula. So what are the effects within a district of a foundation formula, including through the use of weighting factors, and whether to transition from that cost-based foundation formula to an evidence-based foundation formula. So whether or not those steps should be taken at all. And then sections 58 and 59 are placeholder sections to force folks to re-examine the numbers that are in the foundation formula.
We haven't started Kirby.
Okay, should I come back? I'll just hang out in the room.
I'm thinking, Kirby, I've got Senate Ed on there, and I think they might be more interested in hearing the numbers than hearing the tax law. So maybe we'll go through Julia, and then we'll send you home for an hour.
Okay, yeah, I can run back to my office.
Okay,
I was in such a hurry to go grab from the wrong shoes anyway, so.
okay.
Sure.
It was all. Yeah. What we just do our thing. All right.
So you'll recall that yesterday that I talked about the difference between a cost factor and an evidence-based foundation formula is not structural. It relates to the inputs, and the inputs are your base amount and the weights that you use. So what section 58 does is it amends in the future, if contingencies are met, the base amount to this arbitrary $10,000 figure. And what this does is forces the legislature on particular contingencies to examine this evidence-based number and to plug in whatever figure that might be. Obviously, we can't know yet that figure would be. Very similar for section 59. This is your weighting section. And what it does is it sets all of the weighting factors to 1.0. Again, it's just to force the legislature, if particular contingencies are met, which I will describe in just a second, to re-examine what these votes would be. So again, if you transition from cost factor to evidence-based, you need to change your base and you need to change your weights, and that's what these sections do.
And this one is based on.
This is just placeholder. This is forcing, this is kind of like sunset is almost the way to think, but it just forces people to look at these.
Well, I
numbers.
think yesterday, Representative Kornheiser said, yes, that things change, because the question came out, why are we doing it next year, and then getting in.
Oh, sure.
That was.
This,
To force us.
Yep.
To look at it again next year to see.
and this is a potentially far into the future section, and I will just jump to the very end here to talk about the contingencies that have to be met. So for all sections that we've been talking about, for the property tax credit repeal, for the replacement with homestead exemption, for rolling out that statewide distribution tax rate, the new provisions of Title 16, all of those are July 1, 2029. That's the initial rollout of the foundation formula. The December 1 letter technically comes into effect earlier to provide the figures for budgeting in advance of the foundation formula. But those sections 58 and 59, which are those setting everything to 10K or 1.0 factors, that's entirely a contingency. Those take effect upon these 4 conditions being met. So the development and review of an evidence-based foundation formula by professional judgment panels, and then these 90% compliance of Vermont classes with class size and minimum standards in the US, complies by 90% of Vermont school buildings with school size standards set out in those educational quality standards. And implementation of your MTSS, multi-tiered systems of support in each classroom in each Vermont school. So if this isn't even a 90% one, this is 100% implementation. So all of these conditions have to be met before you transition to an evidence-based foundation formula, unless the legislature did something in the intervening years. But as contemplated here, all conditions are required to be met to even kick in those sections.
Okay, so up until then, the present formula,
Up until then, the cost factor. So the cost factor comes July 1, 2029. And I can scroll up to that. That's
okay,
these take effect on July 1, 2029, and they do have a slight contingency built in, which is the school districts have to become operational at that point. So if the school districts are operational on July 1, 2029, as envisioned, you would roll out the transition to a cost factor foundation formula. You would impose the statewide education tax and that supplemental district spending tax. You would repeal the PTC and create a new homestead exemption. And then you would begin the review process for the foundation formula to see whether it's worth moving to this evidence-based foundation formula, even assuming that these contingencies are done.
You use the word operational, you mean with school board members elected, not designed, but operational.
Yeah, so the way that it would work is you would have the boundaries set. It would actually be in effect, and Beth was describing this yesterday, they would be at the same time that the existing school districts exist. You'd have a transition period, right? Operational in this context means that the school districts have assumed responsibility for the education of all resident students. So these are now the school districts, and the current school districts no longer exist. That's when these are operational.
right. And the voting awards and everything else has been set up. And they're
Yep.
voting.
And that's envisioned to happen, July 2027. So that's in advance of this. There's a bunch of things you have to roll out to even get to the point that you can start the budgeting process. You have your school board members in place. Contemplated that you would have a special election, right, in March of 28 to get those school board members elected. So they're in a position to start setting budgets. And they're thinking about the foundation formula, they're setting budgets, which isn't yet in law, but they're aware what it would be. So that is the entirety of my sections.
Thank you.
Cool. Yeah.
That. It's long.
Hope it was not too boring.
Today.
No.
And then. We will. Go through Julia's, then we will take a break. Then we'll come back with Kirby. And. Then we have a little amendment to S30. Which was on, and Bruce, you followed up on
Yeah.
that because you were the reporter, so we'll check that, but we've got to decide if we want to concur, have a committee of conference or.
I think we'll want to concur.
Well,
It's
we
technical, but I'll tell you about
You
it.
can tell us about it. And we can decide where we go. And we'll try to get you out of here earlier. Okay, so. Herbie. It's not here, so we've got Julia.
John. Yeah, I will not allow this.
What's yours? I haven't seen you here in like 4 or 5 days. Huh?
I know. Feels like an eternity. Hi,
Don't worry, you'll be here.
I'm Julia Richter, Joint Fiscal Office. Let me go ahead and join the Zoom and share my screen, if that would be helpful.
Yes. And that especially be helpful because we've got to send it in, so
Okay.
they should be able to see it. And folks at home and the audience.
All right. While I'm doing that, there is the fiscal note for H 454 as passed by the House, posted on, I believe, both committee pages under my name. It is a joint effort of a fiscal note. So I'm also joined by Chris and Ezra, also from JFO, who worked on sections of the bill. So may need to phone a friend depending on where questions go. I guess, so a question for you, Madam Chair, as you know, the bill is quite extensive. I believe that you've walked through all of the financing portions of the bill.
We have walked through everything except the tax portion.
Okay, and am I correct that you have not yet walked through all of Beth's?
We have not
portions of the bill?
all Beth.
Okay,
We skipped something, but
We did most of it yesterday, I think. Beth is on the Zoom. Yeah, not sharing her video or audio. So when we finish, if Beth has anything else, we'll get it in there. Hers seemed to be mostly in the education domain, and I'd rather we got the tax information.
yep, absolutely. My reason for asking is because the fiscal note is reflective of the bill in its entirety. So if there's pieces of the bill that you haven't walked through, it's the question of, do you want us to review the fiscal note before you walk through that? Right now,
No, I think we're gonna go through
the whole fiscal note. Okay. Great. Right. Go ahead and share my screen. I don't know if I've
later.
introduced myself. I'm Julia Richter, Joint Fiscal Office.
Our favorite.
Future state.
Future state of what? Future state of. What are you waiting for?
Shall I
Yes.
dive in? Okay,
No,
so, H 454, the long fiscal note, longer than we normally write. So just starting out in terms of the bill itself, as we know, it makes numerous changes to the statewide education system as well as the education finance system. So some of the policy pieces that, are in that section of the bill include, expanding the Commission on the Future of Public Education, requiring a review of state board rules, implementing school construction program, an advisory board, special education strategic plan, implements class size minimums, legislative intent for school size minimums for certain grades, tuition eligibility changes, including amending statute for the amount of tuition that can be paid to a receiving school. The pieces that John has walked you through yesterday and today are these financing changes. So a repeal of most of Vermont's statewide education finance formula and replacing it with a new funding formula and statewide property tax structure. So this includes the creation of a foundation formula with the supplemental district spending that I think you all were just talking about, for property classification types for statewide education property taxes, a repeal of current income sensitivity, the property tax credit, and replacement of it with the implementation of a homestead exemptions. Also the establishment of regional assessment districts, that's Kirby section of the bill that you haven't walked through yet. And then there's also some miscellaneous pieces included at the tail end, the bill pieces that generally would be included in miscellaneous tax, but there's no miscellaneous taxes here. So I'm going to just keep going unless there's places you'd like me to pause. So have you walked through or talked about the effective dates yet?
Yes.
Yes,
a little bit.
A little bit. Okay, so
Chart.
So legislative council put together that great timeline that lays out some of the big pieces of it. Also, at the very end of the fiscal note, there's a table that includes the high level sections of the bill and the relevant effective dates. I'm talking about that now, because when thinking about the fiscal note and the fiscal impact of the bill, a lot of this bill is not taking place in FY26. So a lot of the fiscal impact can't be estimated at this time because we're talking about future out years as well as pieces that are contingent on outstanding policy decisions that have not been made yet. Specifically school district boundaries, that's one of the big ones, although there are other good ones. So we know many provisions of the bill will have fiscal impacts in future years. We still need details or to get closer to those future years to be able to estimate the fiscal impacts. In fiscal year 2026, so these are all of the high level and then pieces, and then we do have a section by section. 2026. So there's with the establishment of the Commission on the Future of Public Education and the creation of the School District Voting Board Task Force, that increases the amount of per diems that need to be paid out for members of the commission and the task force. So there's an increased cost to AOE and Secretary of State for those per diems. There's not an appropriation made in the bill for that cost. Section 6 adjusts or requires State Board of Ed to do some rules review, and Section 26 appropriates a one-time general fund of $200,000 in FY26 to AOE to provide support for that rule review. The State Aid for School Construction Program includes 3 AOE positions to staff the program or reference of 3 AOE references 3 AOE positions, but the positions are not established in the bill, nor the appropriations. It requires the AOE to come back, I believe in December, with better detail regarding those specific positions. So that we know that will be a cost. We don't know what those positions yet look like.
In December of 26.
25.
Okay.
And we will go into a lot more detail in each of these sections. I'm kind of starting very high level. Section 11 creates the School Construction Advisory Board. So again, there would be per diems associated with the advisory board that are not appropriated in the bill. The sections 32 and 33 establish a special education strategic plan, which would require AOE staffing of a new permanent position at AOE to support the special education strategic plan. This would be an ongoing cost, and it includes a base appropriation for it. And then there's one of the miscellaneous tax pieces, the property valuation hearing officer compensation adjustments, which would be a cost to the Department of Taxes with no appropriation included in the bill. So that is the high level table of FY26 fiscal impacts.
Can I just ask a question or slash flag something for our committee, which is that I'm a little confused by the 3 AOE positions for this, the end of 25. And the reason I say that is because we had the AOE in here yesterday and they said it's going to be really hard to determine the need until the districts are drawn, until the map is drawn. So obviously I'm in favor because I want state aid for school construction, but I'm just curious about the timing. Which positions are you talking about? Oh,
So this is Chris is spearheading the school construction progress, so I would love.
Sure, Chris Roop, Joint Fiscal. The item we're speaking to is section 10 up there. My understanding is when the bill was being developed in the other body, the agency expressed a likely need for 3 FTEs to run the program, which is what we flagged in the fiscal note, even though the bill itself does not create or fund additional positions. As you noted, Senator, there is a reporting requirement to come back by this December for the agency to really flag what all their resource needs are. So it is possible that could tee up a BAA type conversation in order to create and fund positions for perhaps a partial year in FY 26 in the latter half and then continue, but that report doesn't just focus on the staffing needs. That report would also focus on like, what are some of the other needs out there to stand up the program? So that $450,000 number is a placeholder of our best faith estimate of ballparking what an annualized cost would likely be for 3 FTEs pending more detail from AOE in December. Yep.
Okay.
Okay. So that's the high level overview of FY 26. The fiscal note is then sort of split into, I think it's helpful to think of sort of two sections. One is sort of the first big piece of the bill, and then starting in section 34 with the establishment of the new education finance formula and restructuring of the statewide property tax. We sort of have put a fiscal note within a fiscal note for that. So I can,
It's on page 7.
yeah, do you want me to go through the fiscal note in its entirety?
Yes.
Okay,
Well, no, I think committee, do you want to go through?
I mean, that kind of already went through this.
Yeah, I think we've been, and
This is about the commission.
Yeah,
Yeah.
she did go through it.
So-
yesterday.
but sections 34 through new education finance. Because that still is taking some time to wrap your mind and
sure. Okay,
go through that.
so I'm gonna scroll. People will likely get dizzy.
Everybody close your eyes until she's finished.
So at some point, we should come back and review the first 33 sections of the bill because there are associated fiscal impacts in there.
I think the finance formula is the big one.
Yeah,
And and this is based on the numbers in the bill,
Mhm.
the numbers that Ways and Means came to as to the amount of the base and the amount of the weights.
Mhm.
Tammy Colby went over with us last Friday. Okay, so if we change anything, and I suppose the bottom line is, and I don't know if anyone knows right now, at the end of all of this, what is the cost per student that we're coming away with compared to the cost per student now?
sure. So I can certainly speak to that.
Okay.
I before getting into the numbers, if I may, I do think it's helpful to keep in mind the framing of these sections, that this is predicated on a lot of the policy work leading up to these sections. So this is a contingent effective date for July 1, 2029, that is contingent upon these new districts being operational. So we're talking about very much the future state. We don't know the future state. We don't know what those district
Your
boundaries.
state apparently pushes buttons in some members of this.
Oh, okay.
Something
what
to do
term would
with
you
deep
prefer?
state.
No,
It's fine,
You
you
guys-
guys,
fine.
you've already established it in your rhetoric, so go for it. It just has this sort of big brother kind of.
what does it mean?
Yeah.
Actually, can someone define it? That would be helpful.
Sure. So this is a term that was being used in the deliberations in the House that's talking about this place that the bill is going towards, right? So we're talking about these new districts that have yet to be established. We're talking about the class size minimums that are established earlier in the bill. There's school size intent language in the bill that says, it is the intent of the General Assembly in future years to have school sizes of.
So it's
I don't know.
future education system. In a nutshell.
That's a,
Yes.
That's three, I know, it's too many
Let's talk about
words.
we get.
So I'm not gonna make sure
I'm not really a words person. If there's a different term you prefer to
No,
use, I'm
yes.
happy to
We're
adopt
good.
it.
I'll go with you.
I'm not gonna be hung up on this if we
Yeah.
can just talk about this.
So when we get
This
to
is.
this
we're hung up, we're really hung up on this.
envisioned. When we get to the end of this process,
We're talking about where the bill is going,
yes,
right?
so we're
We've got
talking
continuing
about,
effective dates. We have multiple effective dates, all lining up to 2029 and
Right.
beyond. Where are we going to be in July 1, 2029, when the foundation formula comes to be?
at the end of, the transition, where we're going. And this bill envisions 29, I believe the administration's bill may envision something else. And we will hear from them on tomorrow or Friday. But whenever we get to the end of where we're going, that's the future state.
The future station, like we involve pitchforks.
That's
Under benches.
okay, if we ever get there. So, all right, so this is what it will be then.
Yes. So, so the first 33 sections are talking about that, right? There's the special education, strategic plan in there, the tuition changes, class size minimum, the school construction program and advisory council. I'm just saying the ones off the top of my head, not saying that.
It's the roadmap with all the obstacles.
Yeah, so starting on section 34 and moving forward, this repeals most of Vermont's statewide education finance formula and establishes the new funding formula, in the statewide property tax structure. So in general, all of the effective dates of these sections, unless we've noted otherwise in the fiscal note, have this contingent effective date of July 1, 2029. So we're talking several years out. So high level, in the new funding formula, it's the foundation formula, right? So school districts would receive an education opportunity payment, also being referred to as an EOP. This would be calculated by multiplying the base amount by a district's long-term weighted membership. We'll talk about those numbers. Those numbers did come from the Colby memo, which came in early April. Eligible districts would receive sparse school district grants reflecting the enrollment of the public schools in the district. And small schools would receive grants if they are deemed small by necessity. That's a term that is still to be defined. The bill would charge the State Board of Ed to define what small by necessity means. Statewide education property taxes would continue to be a major source of revenue for the education fund. An amendment to current law would split the property tax classes into 4 classes, so that there could be taxation of different classes in the future if that were a future policy decision. As included in the bill, all 4 classes have a uniform property tax rate. The current law property tax credit would be repealed and would be replaced with an income-based homestead exemption. School districts, I believe you were speaking about this today. I was listening into part of your conversation, would be permitted to spend above the EOP if it was approved by local voters. This is being referred to as supplemental district spending. This would be raised through a local district specific supplemental district spending tax rate. That would be reflective of the local district's spending decisions, not the local district's grant list value. That tax rate would be benchmarked against the district with the lowest taxing capacity. I do have it, I guess this is as good a time as any to say it. There is a folder on the JFO website, and I can also walk through any of them here that have some of the presentations that I put together of examples with made up numbers to show the actual mechanics of how it works. So I would be happy to send that link or walk folks through that. So the amount raised through that supplemental district spending tax rate And the districts that are not the lowest taxing capacity districts, those extra dollars would be recaptured at the state level and would be held in a reserve. That reserve would then waterfall into the school construction aid special fund, which is established earlier in the bill. The special fund that is established earlier in the bill doesn't have a revenue stream associated with it, with the exception of this waterfall that's created in these sections. I've spoken to this, but I think it's worth noting again. We're talking about several years out. And so the fiscal impact of the changes of this are unclear and are dependent on a number of outstanding policy decisions. We have done modeling and we can talk through the modeling, but I think it's important to hold in our minds that a number of these outstanding policy choices really will determine the fiscal impact, and those decisions have not yet been made. So going into the sections, 34 and 35, this is repealing our current law pupil weights and repealing the definitions of education spending and per pupil spending because they're no longer going to be used in the new funding formula. This is including the numbers associated with the Colby memo. So section 34 includes the base amount of $15,033 per pupil. This base amount would be adjusted annually for inflation. And it would be the base used to calculate the education opportunity payment, right? So this 15,033 would be multiplied by a district's long-term weighted average daily membership, weighted pupil count, and that would be the district's EOP. So we know that under current law, the weights are tax capacity weights, right? They're used for determining a school district's tax rate, dependent on its education spending and its long-term weighted average daily membership. That's that local adjustment factor in homestead property taxes. This repeals the tax capacity weights because we're no longer going to be in a tax capacity system and replaces them with foundation formula weights. So now, if the construct of this bill were to be established, the weights would, in fact, determine the amount of funding that a school district would be receiving in its education opportunity payment, right? Right now, those weights don't directly determine the amount of funding a school district receives. So it establishes new weights applied against the base. They would still be additive, meaning that if a student fell into multiple weighting categories, those weights would be added on top of each other. So the bill repeals all of the grade level weights, sparse district weights, and small school weights. Those are those weighting categories that we have in current law would be repealed. It would amend, so replace the weights for English learner pupils and students from economically disadvantaged backgrounds. And it would add weights for special education identified for children with a disability. So this is a weighting table of the weights that would be included or that are outlined in the bill.
So I can explain this to others, and so I get a clear understanding. Would you say it's fair to say that a student that is English language proficiency level 1 would really count the formula as 1 plus 2.11, so they count as 3.11 kids?
Yes,
Oh, thank you. And that's good. There's no multiplicative rate weights. These are all additive.
that's correct. I think it's important to note in that example that that student could also fall into newcomer Earth's life, in which case that 0.42 would be added to the 2.11. That student could be from an economically disadvantaged background, in which case that 1.02 would be added to the 0.42 and the 2.11. So within the English and with a disability, yeah, so within the English learner weights, those are mutually exclusive with the exception of the newcomer Earth's life. Same with the students with disabilities, the categories are mutually exclusive. If a student were to have multiple disabilities, then they would fall into category C.
All additive.
Yes,
No multiplicative. Thank you.
no multiplicative, which is consistent with current law. prior to Act 127, we did have some multiplicative weights, but Act 127 did away with all multiplicative weights. So these would be the pupil weighting categories used to determine an education opportunity payment. So these are the weights that would be used for determining a long-term weighted average daily membership, weighted pupil count of each district.
One more question on the new English language proficiency level 1, 2, 3, or 4. I don't know if you're gonna know this, Julia, but I'm wondering, that's not standing up a new program. We're already assessing those in schools. Okay, so that's already done and it's, thank you.
This is, I don't remember the acronym. Maybe John does. WIDA.
Yeah,
I don't know what it stands for.
I've tried to find what it stands for, and I can't.
Oh,
I don't know what it is.
I can find it for you.
It's University of
It's
Wisconsin. I know that.
Wisconsin and yes, we looked at this for the pupil weighting study too, and we used the same kind of concept there with our current weights for ELL.
But we don't have levels.
We don't have levels, but there, we did ask for a report and Tammy Colby did bring back a report with different weights based on the WIDA things for our current formula too. So they're very standard and already used.
Yeah, so to Senator Hardy's point, following Act 127 required JFO to contract out for a report on tiered English learner weights. That report came back to the legislature, I believe, last year.
Yeah.
That had the cost adjustments based off of these different proficiency levels. So the recent Colby memo that was delivered in Ways and Means in early April, and I believe you heard about last week, used that report in determining the tiered English learner weights that we're looking at here.
Okay.
And I will also say that while the data is heavily suppressed, the AOE has been by proficiency level. I mean, it's very suppressed, so we haven't been able to perform an extensive analysis. We're working on an MOU, but the data is collected because they were able to share it.
A lot of this gets down to that fewer than 12, which means it's individually
Yeah,
identifiable, so you can find out we got 1,200 students, but not how many in what school if they're less than 12.
so those are the weights.
We kind of just, WIDA stands for World Class Instructional Design and Assessment. There you go, John. Sorry,
Thank you.
not Wisconsin.
Class.
It is terrible, but go ahead.
It
Why
must
work
be a
on numbers.
legislation.
It's almost like future state.
I would say it's worse.
We are going to have a world-class future state.
Yes, we are.
I only believe that. Okay. All right.
Oh,
Well, I mean,
Going back to
still
school,
not- we do not have, do we?
oh,
No, we do not have Senate Ed with us. No, they have left us. No, there they are. Okay,
I'm the host.
so we've got everybody back and now Julia needs to get her slides on the screen.
Okay.
Technical difficulties. This room has had difficulties. Last year I had to keep rebooting my computer and some afternoons it would do 3 times to stay online. And that's what the text told me I had to do.
She's asking about a break, maybe finding a break on the chair.
We are going to be doing a break after children.
Okay. No pressure.
No question.
Go as fast or as slow as possible.
That's okay. We're gonna be doing all of this more than once.
Yeah. Okay, so these are technical amendments. I won't walk through them unless it's helpful, but essentially just lining up everything to make sure it's running according to what the formula is gonna work. So section 37, this establishes the other piece that makes it more comparable to current law. So this is establishing support grants for necessary small schools and sparse school districts. So you'll recall what we spoke about a little bit ago, that the state board is being charged with determining the definition for small by necessity. That definition hasn't been determined yet. But schools that are small by necessity would receive a small school support grant. And they'll be calculated by multiplying the 2-year average enrollment of that school by the cost adjustment included in statute and adjusted annually for inflation. That small school grant would be paid to the school district.
May I ask you a question?
Yeah.
What if it's a small school or sparse school district or? But it's also wealthy. I mean, do they still get a grant?
So the way that it is, the determination of small by necessity, the term still needs to be defined.
No, yeah, I get that.
Whether or not, if they're small by necessity, meaning they can't reasonably get kids to another school or more kids to their school, then they will get the grant no matter what their property wealth, because we're kind of equalizing that out.
Yeah, that was my question. And is there anything in this bill that contemplates like a community school model or no?
I'm not aware of anything.
I don't know of anything either, but we would need to ask Beth, so hopefully when she speaks to the education
Yeah.
policy pieces, but I'm not aware of it.
Nothing that prohibits it.
I'll have to do that.
Yeah.
The piece, so going back to your first question about the wealth of a district, the piece of the foundation formula that accounts for the economic background that a student is coming from is captured in that weight of the FPL weight for the calculation of the EOP. There's also the piece, the supplemental district spending equalization, but that is referencing the grant list wealth of a district. So there's the small school grant. There's also the sparsity grant included in the bill. This is a change from current law weighting categories where the parameters for qualifying for sparsity are reduced per Colby's latest memo. So if a district has a population of less than 55 people per square mile per land area mile, it would receive a sparsity grant. And again, this would be calculated by the 2-year average enrollment of all public schools in that district by the cost adjustment and statute adjusted for inflation. So this is, I think, a really big piece in terms of talking about the fiscal.
Question about that, the sparsity. It would be multiplied by all the people in this school district, not just the sparse school.
Correct.
So the entire district would get it if
The entire enrollment in public schools within the sparse district. So you're picking up on a change from current law,
Yeah,
whereas
that's a huge change.
in current law, the sparsity weight, right, is for all students within the sparse district receive the sparsity weight. And then if a student is in a sparse district, then it may qualify for a small school weight. This disentangles the two. It says first, we're going to look at small by necessity, definition TBD, and we're going to look at sparsity.
But is it multiplying by the enrollment for all schools in a sparse district or only the schools that are in the sparse part of the district? Because you could have a district that has really sparse parts of it and then a district that has a more urban for high Vermont standards. So do they,
All students in public schools within the sparse district.
okay, that's not, that's, we gotta change that.
The sparsity assessment is done at the district level, which also means that you may have schools that you traditionally think of as sparse, not being sparse, because they could be part of a district that has sufficient population elsewhere. The district as a whole is no longer sparse. So it can work both places.
Because they get.
The
resources
assessment of the
district.
55 per square mile is based on the district as a whole.
Right,
There's no school specific
but the
geographic area.
sparsity, but accounting for sparsity should only matter for the sparse parts of the district, not for the non-sparse parts of the district, because it's a cost factor for the cost of educating kids in a sparse part of a district, not a non-sparse part of the district.
Right, you could draw lines so that there aren't sparse districts.
But it's all being calculated at the district level.
If you wanted to do something like that, you would need to figure out what the relevant boundaries would be, right? Because you would no longer be able to rely on the existing school district boundaries.
Yeah.
But everybody in the district is paying for the transportation in the sparse section. Everybody, the costs
Yeah.
are at the district level.
But the cost for that transportation is only for part of the district. I mean, I'll talk to Julie about it a little bit more. She's gonna say,
Well, I'm glad we succeeded in simplifying education funding.
Not done.
Reggie's starting to feel like cousin Ed. He turns around, gives us wisdom and turns back. Okay, let's go.
All right, so we spoke about the small school grant and sparse school district grant.
And there can be small schools within non-sparse district.
Dependent on the definition of small by necessity. So the way that I have modeled it so far is I have been using the current law definition for small by necessity, because not definition, but the way that it currently is counted, right, is it's small schools and sparse districts. So all of my modeling is saying, we're going to assume that's the definition until something else is sorted out.
So
Using it as an imperfect, but I think the closest to perfect proxy we can have at the moment. And to Senator Hardy's sparsity point, this gets back to why, as the bill is currently drafted, why school district boundaries really do impact the overall fiscal impact of the bill. And I'm actually going to be presenting to Senate Ed tomorrow, different district configurations and how it shifts the cost, the fiscal impact.
and you've shown us in here the property wealth per student in different districts and that all ties in.
Yeah,
And the smaller the districts, probably the bigger the differences are, the bigger the difference, the bigger the district, the more it kind of smooths out.
yeah, and I think, and it also really matters where those lines are drawn, right, and how they're drawn. So 38, this is technical, it's adding the adjusting the revenue sources of the ed fund. 41, this is including and updating the ballot language for the supplemental district spending vote, right? So if school districts decide to spend above their EOP, they're allowed to spend up to 10% above their EOP. Then it needs to be approved by voters. Section 42, this repeals the census block grant, the special ed census block grant. This needs to be taken into account with the fact that the bill would also add in special education weights, right? So we're changing the pieces of the special education funding. So we know that in FY26, that census block grant is estimated to be about 270 million. It will be greater than that in FY 2030. And we need to factor it in with the implementation of weights.
What's, I don't know what you call it, the ABC thing? How is the estimated cost for that compared to $270 million?
We have not done that analysis yet.
Based on this year, you mean about?
Yeah, just apples to apples. They said FY 26, you think census block grant will be $270 million. What's my question, what was the cost of this new construct?
Oh, the weights, the ABC
Yeah,
weights is what
yeah,
I mean.
but-
Okay.
So that's analysis to come.
Yeah, we haven't done that yet. We didn't get the special education data until several days ago.
Yeah.
And we are working on finding it out.
Is the ABC, I'm just gonna call it the ABC model, I don't know what about. Does the ABC model, is it intended to cover all of a district's special education costs,
My understanding is no, because extraordinary is still maintained.
other than the extraordinary, but all expenses other than the extraordinary?
John?
As much as we know right now, but that's part of why there is this report from AOE. But yes, the idea was that this is replacing the census block grant and then retaining those extraordinary reimbursements. But it could be that the report or the task force on special ed comes back with other costs.
But I think,
As we know today.
So what I'm trying to get at is census block grant doesn't necessarily cover all special education expenses. It should, the district's doing what they're supposed to be like. So that's what I'm trying to figure out is does the ABC model, are we talking about all special education expenses or just replacing the census block grant amount?
my understanding when Tammy was doing her presentation on the weights, the weights do take into consideration federal funding for things like Title I and the special education costs that are covered by federal funding. I asked her that specifically.
Yeah.
So it doesn't cover all of the costs because there are, some of the costs is covered by federal
All
funding.
this, I mean, all this, the district costs.
Yeah, I think my understanding is it's supposed to cover sort of the equivalent amount that the block grants cover. But that, per that.
But if this is a particularly either far, well, not particularly that gets more payment, perhaps poorly managed district that spends 20% more than the norm.
Right now, if they,
Yeah.
that comes out of their education spending.
Yeah, and that, I think that's what you're asking is this, can you spend more than that? I suppose it would have to come out of your foundation. You're gonna get so much
If you're-
kid,
Yeah, if you had a census
That's it.
block grant with a foundation, it comes out of the foundation.
yes,
If the ABC is meant to cover our current special education spending, and it's an on top,
okay.
we don't know yet.
No, Ezra is working hard to do this analysis. One of the pieces is trying to do some of the crosswalking too, in terms of what is included in education spending. And confirming we have the right data from AOE, so we will follow up as soon as the analysis is ready.
We haven't gotten to the future state. It's still trying to build the road. So, yeah, there's a lot of data, a lot of changes. Special ed has always been kind of a black box into which we have thrown money and hope for the best. It's been a frustration forever. We've stopped even complaining that the feds who mandated don't pay what they said they would. And we'll be lucky if they continue to pay interest. So all of that is hanging up there. As I said, we are going forward with what we know, understanding that what we know could change very rapidly. Okay. So let's keep moving.
All right. So now we're getting into the reserve that we spoke about. This is section 43. This is establishing that supplemental district spending reserve. Be as the bill currently contemplates, used by finance and management to account for any miscalculations or if the data was not complete when the calculations were made, just making sure school districts are getting how much they have approved and voted on. At the close of the fiscal year, then all remaining funds in that supplemental district spending reserve would then waterfall into the school construction special fund.
So on this, I do have something that I won't dive into deeply here, but this is a visual that outlines what the recapture rate that I understand it from the houses come over. So you'll see the recapture column. I did share this briefly with Julia and we did discuss this. And this is using the VSBA regions, which I know is not going to be what the ultimate districts are, but just it was something that floated out there. And I did sort it as well, but this is how I'm understanding the recapture rate to currently work as proposed by the House is that Franklin Grand Isle, if these were our districts, they have the lowest ratio of equalized grand list value to long-term ADM, and that it would be Kingdom South, Rutland, Kingdom North, and you can see it. About a third of them would actually be at that lower around 1. The notion that I keep gravitating around because of the concern with what's come over from the House, which I do like. I like it better than what the administration presented, is that if you're in Wyndham or Windsor, this recapture, this percentage, you could think of it as a tax, it's a recapture rate. So if you want to raise $1, you actually have to raise $1.95. So this would be, if you're in Windsor and Wyndham, however the districts shake out, they are going to get, for every dollar they want to raise, they have to tax $2 for their district. If you took the FAR approach, where you couple what the administration brought forward, a state guarantee and a recapture based on a straight average, I know it could create risk where some districts might not raise these things, but that's what we do here is we balance things out, is that the districts that have a higher grand list ratio would actually pay the recapture, and those that have a lower than the average would actually get cheaper money, which would be about a third of them. So this is a notion I've been shopping around. It seems to be equitable in my mind, and it would be most equitable to the Windsors and the Wyndhams, while also somewhat gravitating us around an average equalization tax ratio that might balance itself out. It might reduce funds into this contemplated school construction aid, but it seems equitable from a taxpayer's perspective. So it's something that I'd like to, if you want to entertain more
When we
discussion.
get to it and start looking in detail at alternatives and how this works, then we're not show those guys. We'll look at it.
Yeah.
It'll work very well. Okay. But as we go through this, we're going to take one chunk at a time because trying to digest all of it, I think, is a little much for most brains at 2:30 in the afternoon. So,
One question.
Yeah.
Is that just homestead?
This is on total equalized grand list value, but we could run this on homestead, non-homestead. It just hasn't been made clear because I haven't spent enough time with Julia as to why we might want to do one or the other.
we can,
I feel like you just.
we'll get to this when we get to it and give Julia time to digest what you're talking about. So I wanted to finish this, and then we've got this
Let's
one,
get an answer.
and it will go into the to be considered file in detail when we get there along with this.
Yeah, I would say there's a lot of considerations in terms of like this grants. You decide who levy the gap.
There are many ways to utilize this.
44 and 45, these are reports required. We've included them in the fiscal note, not because they have a fiscal impact, but because they are providing information for outstanding policy choices that may have a fiscal impact. So AOE needs to come back with a report about transportation reimbursement. This is all of this is due this coming December. And then JFO, we are supposed to come back or would come back with 2 reports. One analyzing inflation indices to be used in the foundation formula and the education funding system. So the House didn't feel like they had enough time to dive deeply into the vast considerations of inflation indices. So charged JFO with coming back and doing some work on this. Also looking into pre-K and CCFAP and other early care amenity systems. 46 and 47, this establishes the statewide education property tax and the supplemental district spending tax. Also, some people are referring to it as the SDS tax. So under the proposed structure, the General Assembly would still annually set a property tax rate. But it would be setting only one education property tax rate at a level sufficient to ensure that the ed fund is fully funded after accounting for non-property revenue sources. This single property tax rate would be applied against these 4 factors that would be in statute for the different tax classifications, the homestead and then the 3 non-homestead. Currently, as the bill has it, each of those factors have a classification, have a factor of 1. So that would mean that the statewide education property tax rate would be uniform across the state and across all classes. I did hear a question, I think, earlier in the conversation about the CLA. The CLA would still need to be applied for these rates to ensure that everyone was paying their fair share. There are pieces that are adjusting reappraisals later in the bill, curvy sections. So there's that one statewide property tax rate applied with these different factors if they exist. And then under the new funding formula, school districts could put out to voters, and then voters would need to approve supplemental district spending, which.
We went over this with John a few minutes ago. So
Okay, great. I will move quicker.
quickly and just look at the money implications.
Okay, so again, the fiscal impact of this is unclear because it would depend on policy decisions, including district configurations and also supplemental district spending decisions. So we don't know what districts there will be, and we don't know what they would choose to spend.
And I think probably you could stop at 62 because I think that's where Kirby's gonna pick up,
Sure.
isn't it? At regional assessment district?
Yes.
I think,
That's 60.
and at 60, okay,
So we're getting close.
yeah.
Section 48, this amends the December 1 letter. One of the ways that this funding formula is different is by folks would know what the property tax rate would be for the supplemental district spending prior to putting it towards a vote. And that would be known by information included in the December 1 letter. 51 and 52, this establishes the homestead exemption. I've done a lot of modeling of the homestead exemption for House Ways and Means. We were looking at FY25 data. So this would estimate that the current construct would be approximately 45 million more than the property tax credit under current law. So this would be raised somewhere, absent any other changes in policy that would result in an increase in the property tax rate to cover the increase in the exemption.
Did they say where the somewhere was, or
Sorry,
does the bill say where the somewhere is, or?
say the,
Somewhere.
oh, the somewhere, I was thinking some SUM.
That's exactly what I thought too, the first
That
time.
is, estimates the home says it would cost approximately $54 million more, but they don't identify where that would come from, or?
Correct. So it would come from property tax, right? Because the statewide property tax is set to ensure that ed fund is fully funded.
So I know.
Okay. No, we're trying to lower property tax.
Well, we are, some people.
Lots of need the most.
So I noticed we still stop at 115,000, so that just increases the credit, the value of that exemption. Is that safe to say? If we're raising $45 million more, but we're not expanding who's eligible for that? So folks are getting more discount on their property tax bill within the same class.
By and large, yes. I think it might be helpful to come back and I could show more in-depth modeling. I broke it out by house site value into a lot of different buckets and homestead value. To be fair, the modeling is up to $115,000 per snake, in house.
I think that. You know, we've seen charts and there's been reds and blues and winners and losers usually at both ends. So I think it would be helpful to see this chart next to what you qualified for under the present system.
I'd be happy,
I think that.
I know you're trying to get through this now. I'd be happy to come back or do
Oh,
it
yeah.
later or whenever works.
Yeah. No, we're gonna go through this section by section. Probably dollar by dollar.
And when Chair Kornheiser was here, she said they did not put a limit on the property house value, and she encouraged us to consider that. So if I had a $3 million home and I only make $25,000, would I be able to, how much would I be able to exempt to that $3 million?
How much did you make?
If I only make $25,000, but I live in a $3 million home,
So you could exempt 90% of the $3
we
million.
probably should look at that. And
Probably
they encouraged us to.
not much of an outlier there. It's less. Agreed.
I don't think that's common, but
No,
No.
but
I'd hate for this to go through.
Well,
The irony is that you said that because you were really concerned about the low income people with the high house site values earlier this session.
but
Yeah.
if you were in a couple of the ski towns and the values range fairly widely for town. The same house in Lowell and in Stowe has
Could county sensitize it? I think that was,
quite a bit of
the
difference.
chair mentioned that. That's why they didn't tackle it as Chittenden County is different than Essex County. And so
Yeah.
if there is a way to have that threshold be somewhat related to the
Related.
county. I think
Work on that.
Yeah.
If you're rich in
Just make it so
Essex
much more
County, you
complicated.
could probably,
Randy wants it
We'll
more,
do
Senator
that.
Brock wants this more complicated.
Senator Brock wants it more complicated.
Yeah, it's too simple.
Do you understand it, Senator Brock?
Vaguely.
Because if you do, then we definitely need to make it more complicated.
okay, we need to finish. It is not Friday. It is only Wednesday, I think. Okay, so we're at 53. We've got the declaration form. I think we can just move through these.
Yeah, so that is that's the vast bulk of it. The last section, 58 and 59, this is moving to the evidence-based foundation formula. The bill currently all just has placeholder numbers. For moving to the evidence-based formula. Right, so all the numbers right now are cost adjustments.
It's a cost,
Cost
but evidence base will be on what it actually does cost us.
So evidence-based was the underlying model of what was
Oh.
presented by the administration.
Okay, so
They made
that's
tweaks
the
to it.
Picus,
Yeah.
Odom, okay, their model, all right.
It's the two of the ways of getting at a foundation formula numbers, evidence-based, sort of the building blocks.
Okay. Yeah, okay. We've got a long time before we need to work. All right. Property classifications, I think we've gotten that we're at 4. We can raise the ratio at any time, but right now, everybody's paying the same thing. At least as the bill has come to us.
Can you put this on a napkin? I think that's the standard that we need,
Oh,
Senator Brock.
Yeah, you can read this.
The napkin standard.
Yeah. Once we tell you what your base amount is,
Then you can do it on a napkin.
then you can calculate what your above base spending, if we allow that, will be. Might take a calculator to calculate your homestead exemption. Okay. So. Minnie, let's take a 10-minute break. going to be generous, be back here at 10 minutes of 4. Does that work for everyone?
Yep.
Then we'll walk back through those last few sections. We will get a 5-minute run through of the proposed amendment to S30, so we can stand up and say we approve, disapprove, or want a conference